In this module, we are going to discuss using the Professional Workshops Review, Compilation, and Quality Management forms. A brief history of the PWI forms. I developed them for use in my practice, and they were intended as guidance more than documentation, but they do both. In the first iteration, they were 300 or so individual Word documents, and as you can guess, I could kind of figure out how to use them, but it was more difficult for staff. Difficult to figure out how to assemble 300 documents or which of the 300 documents you needed to include in a file. Sometime after the Clarity project and after the first iteration of Section 315, I put them into Excel. And there are two audit documents in Excel, two key audit documents in Excel. There are other documents, one for reviews and one for compilations. I was asked if I would share these with others, and I agreed to. And at the time, I thought PEG would overtake my set of forms. It hasn't. Now, my philosophy in developing these forms and the challenge of any set of forms is ease of use versus areas covered. And I were trying to make these efficient and effective for my practice and my staff. I therefore chose to make them minimalist. All possibilities were not included. You can do that if you want. You can have every single possibility, every single item in the application material, in the handbook in. But the more complete it becomes, the harder it is to use. So my assumption is the practitioner knows and uses standards and when to move out of the forms in a rare or complex area. So I've done them on a minimalist basis to make them easier to use, easier for staff to use. Now, as an example, if reporting were in and it's not, it would be longer than the 400-page CPA Canada reporting document, which is incomplete. And that's not a criticism. It's just that that's how complicated reporting is if you wish it to be absolutely complete, and even at 400 pages, it's not. So to make the form efficient to use and effective to use, I've taken a minimalist approach. We will talk in a second about whether prompts are required, but I find prompts are helpful. For instance, I find it helpful to have a checklist step, get an engagement letter, because that reminds me or my staff to get an engagement letter. But the prompt is not required because the engagement letter in the file proves this. And if the engagement letter isn't in the file, the fact that you've got a checklist step saying you got an engagement letter doesn't mean anything. But as a practical matter, doing the file, a prompt is very helpful. Now, the prompts are included to remind you, and particularly they were there to remind me. They're not necessarily documentation, though they may be. And unless the file contradicts a step, as I just mentioned, they're useful to remind you to do stuff. Now, in areas in the checklist where more is needed, there is an empty spot in gray to be filled out. And you may need more even than that is in the checklist. So professional judgment is required if more is needed, and you need to know how to do an audit because no set of forms is going to do the audit for you. And then aside on dating of representation, engagement letters, dating the report, and dating all the forms, all the steps on the forms, they kind of have to be the same. Audits, they have to be. Reviews, they have to be. Compilations doesn't make us much difference. But as a convenience for staff, so staff know what to do. The rep letter, the engagement letter, the report, and the forms all have to be dated the same day. Or rather, the forms have to be dated at least on that day, probably before. So it's simpler just to make it so. Um, don't quite understand representation letter dating in audits. It can be shortly before but not after. Don't quite understand what shortly before is. 2 days, a week, a month, a year. I don't know what shortly before means. Seeing we draft all these letters and all these reports, make them all the same. It's simpler, and make all three engagements the same. That's simpler. Everybody just understands the rep letter date, the engagement letter date, the report date, and the forms are all finished by that day. Now the engagement letter date, other than the first letter must be dated before we begin the engagement, or at least it must be documented that way. Once we've got the first one, I don't particularly care what the date of all the next engagement letters are, and we will find that I prefer to get a new engagement letter every year, because the work you have to do to avoid getting a new engagement letter is more than getting a new letter. And you don't release the statements until you have both. If you release the statements before that, you will never get one or other of them back. So you say to your client, if you want the final set of financial statements with my audit report or review report, get me the engagement and rep letter back. Not that hard anymore. Things can be sent and signed electronically. If it is signed electronically, make sure the date is correct, not before or after. All checklists have to be done by that date as well, and it's required by standards. I would also prefer that we've done all the necessary work before we issue our report. The forms, by the way, do not allow backdating. There is one of the design purposes of the form. The problem I already always had as I was reviewing my paper forms is determining if I'd filled out all the steps. So the forms have a method and hints to tell you, are all the steps filled out or not? Big red X will come to that. And in the representation letter, and this is to make staff training easier, so staff understand all three letters work pretty much the same way. The board approves the financial statement with a date, certainly a date or reference to the rep letter date in audits and reviews, approves the financial statements, said the board has approved them, and they approve the adjusting journal entries we have proposed. And in all clients, particularly in a smaller client, a small not-for-profit organization, for instance, I want both those charged with governance and management to sign the rep letter and the engagement letter. And this is just to make it easier for staff. They understand. In an audit, there is an audit, rep, and engagement letter, get them. In a review, same. Compilation, same. Get them both, get them properly dated, and put them in the file. So we understand, what does the word shall mean in professional standards? What must we do? Now, if standards say the firm shall, or the practitioner shall, or the engagement partner shall, that means it must be done. That's what shall means. You've got to do it. Must it be documented in those three circumstances? No, it is not required to be documented. It says the firm shall, you have to do it, but you don't have to document it. And who can do it? In the first two, anyone can do it. If it says the engagement partner shall, then that has to be the engagement partner. Forms are kind of set up so that if this is something the engagement partner shall do, it has to be signed off by the engagement partner. The only time we must document it is if the standards say shall document. Now that can still be done by anyone. It doesn't have to be done by the engagement partner. But only when it says shall document do we have to do it, and do we have to document. So if someone says to you, you must document this, you have to have documented it. Your handbook brain responds one way, and your practitioner brain another. Now your handbook brain will respond loudly. It will say, no, I don't have to. I don't have to document that. It's not a shell document requirement, and it's documented elsewhere. And you're right. Your practitioner brain probably should respond a little different and a little more quietly. And you might say, well, you know what? A prompt, at least, is not a bad idea. I don't want to miss doing that. It doesn't say I have to document it, but I wouldn't mind having a prompt saying, did we do this? And maybe it's not a bad idea to document it. Even if we don't have to document it, maybe it's not a bad idea to document it. And then you say, I wonder if it's documented someplace else. Now, this is because if we do miss something, we want to argue that we did a proper job and that it was properly supported and documented in the file. And we can demonstrate, even if perhaps there was something wrong, that we did a proper job. We're now going to do a quick review of standards and some fatal flaws that you can either make or perhaps are in standards. And these we're going to review this to understand how the forms meet the requirements. And the other thing I think you're going to find, if there is a shall requirement and you think about it, you're probably going to conclude, I know I don't have to, but I think I would prefer to have that documented in my file as quickly and as efficiently as possible. But I think I'd like to have it mentioned and documented in my file and as quick as I can, but I would like it to be there. These, therefore, are the areas we're going to talk about. We're going to talk about highlights of the review standards and some fatal flaws, highlights of the compilation standards and some fatal flaws. Then we're going to talk about using the review forms, the compilation forms, and finally, the quality management form. So first, a quick review of review standard. Now, some possible fatal flaws. Doing audit procedures in a review. This makes it look like you're doing an audit and potentially could make you liable as if you had done an audit when you're only doing a review and providing limited assurance. Using audit language, reasonable assurance. We obtained reasonable assurance. Don't say that in the review. That is higher than you're required to get. Starts to imply that you've done more and should have caught more. Should have caught what you would have caught in an audit, but not in a review. Review language is nothing has come to my attention that causes me to believe that blah, blah. Limited assurance is the review language, not reasonable assurance. Now, sufficient appropriate audit assurance is in the section, and I just said that wrong. Sufficient appropriate review assurance. I prefer not to use those words just because I might accidentally in a review engagement file say I obtained sufficient appropriate audit evidence because I'm so used to doing that. Reviews are very similar to an audit. Ethics rules, acceptance rules, quality management, and so on, all at a review level. But the only procedures we do are inquiry and analytical procedures unless we think material misstatement is likely. If we do not think material misstatement is likely, we stop at inquiry and analytical. There are a bunch of representations we are required to get, perhaps more that we'd like to get. I haven't put them all individually in the checklist to keep it short. They are in the standard rep letter. So in the checklist, you can say, I inquired about management about this, and their response is in the standard rep letter. That keeps it quick and simple. This is my documentation choice. There are a bunch of different ways you can do it. The most complicated is have a piece of paper with a list of inquiries, sit down with management and discuss it, discuss each individual one over and over and over. There are 10 or 20 of them. write down what their response is. Problem with that is if management hasn't done this in writing, later they may forget what they said and say, oh, I never told you that, or you may have misunderstood. So I kind of don't like it when it's we write it down in the file. You could then have a checklist step, have all 30, however many there are, requirements in a checklist step. My preference is I inquired and the response is in the rep letter. It's in writing. Management has signed it. And as I said, the risk is management forgets what they told you or you misunderstood it. If it's in writing, it's clear. That's what they told you. That's what they said. Be careful what we say we do about fraud in a review engagement. It basically is only in the representation letter. I would prefer that the word fraud never appeared in a checklist step unless it's referring to the rep letter, and never appeared in the file. There are 4 references to fraud in the handbook for review engagements. Paragraph 28, management agrees in the engagement letter, and you might even repeat it in the rep letter, that they are responsible for internal controls necessary to detect and prevent fraud. Paragraph 47, we are to ask, we are to inquire, and I would like that in the rep letter, that management has told us of any we do know procedures. Paragraph 51 describes what we do if we find it. Well, that is going to be very complicated and particular to the circumstances, so that's outside of a checklist. And paragraph 69 kind of repeats 47, where they say we are not aware of anything. So 47 and 69 are kind of the same. All 3 I would put in the rep letter and have it in the engagement letter as well. That's all we do about fraud unless we trip over it. And for instance, do not say in a checklist, describe any actual, suspected, or alleged fraud, illegal acts, or non-compliance with laws and regulations. First of all, that's an absolute statement. Describe any, all, everything, any actual or suspected or alleged fraud or illegal acts. Describe them all. Can't do it. It's an absolute statement. Far more than required by the standard or can be done. So be very careful with your language in a review engagement. Keep it to review level language. In a review, we assess whether material misstatement is likely to arise, MML or LMM, however you want to abbreviate it. Standard's not entirely clear how we do that. It just says do it. In the form, I have taken the approach that there are a list of inquiry and analytical procedures appropriate for each individual financial statement section, for all of them. We will do that list of inquiry and analytical procedure, first of all, to determine if material misstatement is likely, and having concluded the material misstatement is not likely, we have documented that we did inquiry and analytical procedures as appropriate in all sections. You don't have to do both. It's inquiry or. You don't have to do both. And then having done all that, you use professional judgment to determine if material misstatement is likely. Now standards allow, and I don't quite know how to do this, that you only have to consider areas where material misstatement might occur. And I don't know how you figure that out. And whatever that process is that inquiry and analytical procedures, another step? My conclusion is it's just simpler to do inquiry and analytical procedures on all financial statement areas, and the forms do all, because I think that's less work than this other step of figuring out which areas you don't have to look at. And I don't know how you do it. So the forms just do all. There is a list of inquiry and analytical procedures, all components. Do them. Materiality is determined the same way as in an audit. Technically, it's not required that you document it, though this is one of those things that I'd kind of prefer to have written down, guidance to staff, my professional judgment as to what I think the number is, and let staff know. The forms, therefore, have a prompt. We will look at it in a bit. Do we have to say why, same as in an audit? Well, no, we don't. All we really have to do, even in an audit, is write down a number. Materiality is $50,000. There we go, done. And, well, why did you do it? Well, in my professional judgment, that's what it was. Well, could you say some more? Well, in my professional judgment, based on the users, that's what I thought was enough. You can go on more if you want. You will see in the example I'm going to show you, I've gone a little further than that because I've decided that that's what I want to tell. I want my staff to know. But there is a gray box on the form. Fill it out. And there is no requirement for performance materiality. In an audit, you set materiality and then performance materiality at less, not required in a review engagement. So don't mention performance materiality, and it's a waste of time. What do standards tell us about how to determine whether material misstatement is likely? Says it's based on our understanding. Said it's based on the inquiry and analytical procedures we do. So that's the approach the forms take. That's not a lot of guidance. What is the dictionary definition of likely? Well, it's well might happen or be true, or probable, and probable means likely in the dictionary. So likely is pretty high. Not sure that likely isn't higher than high in an audit, but it's somewhere around there. It's pretty high. It's certainly not moderate. Moderate in an audit is kind of 50-50 chance. Likely is defined as more likely than that. So when we say very often, perhaps almost always, in a review engagement, we never identify material misstatement as being likely. We can see why that's true. They've defined it pretty high. Now, material misstatement likely. If it is, we've come across something based on our inquiry and analytical procedure that we did, we have to respond. And we have to do more, and what we do will depend on why we think material misstatement is likely. I would observe in a review engagement, we almost never conclude likely. So that's going to be very unusual for us to conclude that material misstatement is likely. Using audit language, we would probably find that risk of material misstatement is always low. So material misstatement being likely, probably not. There is a gray box on the form to complete, and as I say, often that will be left blank or noted not applicable to tell people that, well, we didn't identify anything. Highlights of compilation standards. We do no work and we give no assurance. So when we're reviewing a compilation file and we find that work has been done other than for a good reason, should probably take it out. And if we find in a compilation file words that imply assurance are being used, we should take them out too. Now, compilation standards require lots of documentation unrelated to work or assurance. So therefore, I guess we'd better provide that documentation while being very careful not to do any work or to give any assurance or to use any words implying assurance. Now, compilation fatal flaws, and this is something that worries me about standards. Standards allow for use by third parties of compiled financial information. We were once told in the days of notice to readers not to do a notice to reader if we were aware or the client told us that a third party was using the financial statements. So if we saw a bank loan on the financial statements, we would have been told you shouldn't do a notice to reader, you should do a review engagement. I think that's still good advice. We need to be very careful if there are third parties using. So fatal flaws in standards. The suggested engagement letter in the handbook does not ask the client, or the client does not promise to update the practitioner for third parties that arise after the engagement letter is signed, and they could. There's no suggested rep letter. That could be used to update between the date of the engagement letter and the date of the rep letter. It also does not ask management to update the practitioner if third parties arise after the financial statements are issued. And the PWI, belt and suspenders, the rep and the engagement letter do both. The client promises, we've told you about all the third parties we are aware of and who's using it, and if others arise, we'll tell you about that too. And the rep letter and the engagement letter both do that. The other problem with this is the client honestly may not remember who the financial information was given to. They may not have a loan, but the banker may have asked for the statements just for the purpose of opening a checking account. An insurance agent, to insure the building, may have asked to see the financial statements. So there are some users that are obvious from the face of the financial statement, a lender. But the client, if you say, who did you give these to? They may go, I don't remember. I don't think I gave them to anybody. So be very careful if there's an active third party. Make sure that the client has promised to do all the things that they're supposed to do, and his client's supposed to tell the third party that they can't rely on the financial statements and that the client will give them any additional information they need. Be very careful if there's an active third party. Standard setters have designed this section as if there are a whole series of active third parties using these financial statements. And that's unusual and unlikely because typically these are for very, very small clients. But be very careful if there's an active third. Now, the other thing standards say that I wish they didn't is they require an accounting policy note. Now, we have done no work, and we have absolutely no idea whether the note is right. And depending how you read standards, sometimes it makes it sound as if the accountant has written the note, and it's management that's supposed to have written the note and required the note and required that particular accounting policy. So I think the solution is to say as little as possible, but you absolutely have to have a note. It's required. So have a note and have only one, and no cash flow statement or any other bonus disclosure. Bonus disclosure makes it look like you did some work. We're trying to serve user needs. Lawyers will have a field day. So with respect to this note, paragraph A38 kind of gives you a hint. The financial information has been prepared on the cash basis of accounting. That's one of the suggestions in A38. If you're going to construct a note, I prefer to put management basis of accounting on the top of it and then say the financial statement information has been prepared. I might prefer compiled on the cash basis of accounting with certain accruals provided by management, and not much more than that. It has to be something that we know is correct, having done no work. Now, the position I take is get a rep letter. And people argue with me and say, oh, it's not a rep letter, it's an acknowledgement letter. I don't care. For simplicity for staff, I want a rep letter, audit, review, compilation, and there is a standard one. Now, there are three options for you in standards. You can get the client to sign the financial information. You can get oral acknowledgement, though I don't like that one as much because they could forget. There are two things that have to be done. Acknowledge responsibility for the final financial information. I guess that can be done by signing the financial information, but we also have to get management, and I would prefer those charged with governance, if there are any, to agree to adjustments, not adjustments prepared. Adjustments proposed may be okay. Staying very close to the language in 41C, adjustments agreed, fine. So I want those two things in a rep letter. I'm going to call it a rep letter. Don't care what I call it. The acknowledgement letter really is only for paragraph 35. I guess if it's for 41C, it would have to be an agreement letter. So it'd be an agreement and acknowledgement letter. But I also want the rep letter because it may be dated after the engagement letter to update with respect to third parties. So I want an actual written letter. I want documentation in the file, particularly of points 2 and 3, but we may as well throw in third parties. And depending on who gets the rep letter, we might even repeat in the rep letter that management is aware that we are doing no work and providing no assurance to anyone. So we might just want to do that. I've seen situations where a practitioner's acknowledgement letter got reproduced and is distributed to shareholders or members of a not-for-profit. So useful to repeat all that stuff, make sure everybody's aware. And again, care with language. I've seen people do this. Determine whether any matters exist that would cause the statements to appear misleading. Probably want to say financial information, not statements, but I don't really care about that. Any matters is 100% assurance. Determine whether any matters exist to appear misleading, not even materially misleading, misleading in any way whatsoever. So that's, be more careful. Don't use language like that. Use compilation level language, which is I have no conclusion, not making a conclusion at all. If there were a conclusion, it would be 4232. I think you need all the words. I have read the compiled financial information in light of my knowledge of the entity and the basis of accounting applied, and I considered whether such compiled information does not appear misleading, period. And I didn't conclude that it wasn't misleading. I just read it and considered, and that's what I did. I need all those words. I don't want to say does not appear misleading because now I'm giving positive assurance. And does not appear misleading is kind of a double negative. Those are the words standard setters used. Those are the words I want to use. And just to conclude on this, both reviews and compilations, we do not want bonus testing or bonus words. Don't do it. So we do not want audit style words or tests in a review unless we've got material misstatement being likely and we're doing more because of that. Be very clear about that. It's inefficient and it will create possible liability, so don't do it. Audit or review style words or tests in a compilation. Again, inefficient, possible liability. Don't do it. Now, the financial statement format, audit or review, is GAAP. Whatever the GAAP is, it's general purpose information for general purpose users. Unless we know of a specific user who's, told us specifically of information they want. In an audit or review, you get GAAP. In a compilation, the financial statement format is financial information on one note and no other bonus wording. So using the review checklist, purpose of the form is to instruct assistants. So we're going to take a quick look at what it looks like, and then we'll talk about how the form works. So a quick look at what the form looks like. This is from the middle of the form. It's not clear from this printout that the first column under the big red X is for initials, and the second column under the big red X is for a date. Put in the initials, the date pops in, and we can see there's a yellow exclamation point because the step is not complete. We also see some of the steps have gray areas. They look kind of yellow, but on the form they're gray. Topics on the review form, the big red X, clearing the big red X, and sections in the form. There are all the different sections on the checklist: continuance, independence, material misstatement being likely. That box is probably going to be blank on most clients. 376 lines, so it's rather a long form. Not as long as the audit form, but much longer than the compilation form, which is only a single page. The big red X in the top of the form, that indicates that the checklist is incomplete. And as a practitioner, one of the worries I always had So I had to spend review time sifting through files and checklists to make sure every step was completed, and often you'd miss one. So with a big red X just saves you a little bit of time. You now know that every section on this checklist has been filled out, and completing it removes the big red X. So that's the advantage of the big red X, saves you a bit of time. And each step has a yellow exclamation point that turns to a green tick when it's completed. And at the end there's a total of cleared and uncleared steps. Clearing the big red X, the steps clear when complete, so you clear line by line. There is step logic. Some questions have two parts. Some questions have a gray box to fill out. If you don't fill out the gray box, it doesn't clear. If you fill out both parts of the question, it won't clear. So you have to understand the step logic, and once you get used to it a bit, this will be pretty obvious. The gray boxes are a tip to the reviewer. Once you know that the big red X is gone and all steps are completed and something has been written in the gray box, now as a reviewer you can just go through what's in the gray boxes and see whether you think that's satisfactory. And that is another thing that can help you focus your review. So as we clear a line, we remember that the purpose of the checklist was to remind us what standards require, to help us document standards, but the reviewer and the practitioner has to understand more may be needed. There are several types of questions, as I said, all require an initial. So there is a drop-down box on the menu. The date is automatically entered. There is another form where all staff enter their names and initials, so that simplifies that process. As I said, anytime there is a gray area, complete it, either in the checklist and there's enough room, and most of the gray boxes just get bigger and bigger as you fill it in, though it may be simpler to say, see working paper such and such. Now you're supposed to clear them all before the report date. Standards say that. So do so. And that's what the big red X is there for, to help you make sure that you've done it all before the report date. And unfortunately, if you don't, and you fill them in later, it will make it very clear to someone looking at the form that you didn't follow standards. So follow standards. This is part of the review engagement form. I've tried to pick a part that shows various of the boxes. Question B 1.1, documentation of understanding of the business. And he carries on the following type of business. Now, most of my clients, if you had said retail store or restaurant or roofing contractor, that would be enough. And I would expect in very many clients, that's all you need to say, very brief. Now, if you're doing a review of a multinational corporation with activities in many countries, first of all, you probably shouldn't be doing a review. And second, what you probably do is refer, if it's a really big business, refer to a working paper. So you just put working paper 12. Business locations. B1.3 is a different type of question. You've got choices, either none or list. And if there's a list of industry characteristics, they will be on a working paper. Corporate ownership, you're going to click one of the four. If you click two of the four, the step won't clear. If you click the last one, other, but don't fill anything in, the step won't clear. So that you can see there are many different types of these questions. You clear, you see the yellow exclamation point. You want to turn it into a green check mark. And once you've done that, the big red X goes away. And just to quickly repeat what I said on the previous slide, questions that are type of business probably can be filled in with a couple of words. Retail store. Some may need more words. Business location, simple small client here in Winnipeg. Winnipeg is enough. The boxes do get bigger as needed. I don't want in a form to have to write down every possible possibility. So completing the gray boxes is up to you and your professional judgment, and going from the very minimum that's required, because that's all that's needed, to providing more if more is needed. using the compilation checklist. Now the topics are the same. The big red X and clearing it are all the same, except this is shorter. It's on a single rather longer page. Here is the top bit of the compilation form, 13 of 17 questions, so it's not that long of a checklist. Most of them are just prompts. I got an engagement letter. I complied with the relevant ethical requirements. Now, haven't gone into long detail there. Practitioner has to know what they are. There are very few ethical requirements to relate to a compilation. Probably the only one of importance is, do we own it? And if you own it, either you have to have disclosure or decide that you shouldn't be doing it. So same thing, yellow exclamation point that turns into a green check mark and tries to stick very closely to language and standard. Now, why do you want to have forms that are minimalist, that just meet the standard? If you set a higher firm standard, it becomes GAS or generally accepted standards for review engagements. And if you then only comply with standards, but not the higher standard you've set, you have failed to comply with GAS or review standards. So be careful if you decide to set your firm standard higher than what is required in the handbook. What are the forms? There is a review engagement form in Excel and rep and engagement letters in Word. And the rep and engagement letters are integrated with the form. In other words, if there's a representation you are supposed to get, it might not be mentioned in the form, but if it is, it just says it's in the rep letter. And there's a quality management checklist. Reviews have been subject to quality management for a while. The compilation form has a form in Excel and a rep and engagement letter in Word, same deal. There is also a QM checklist for compilations. It is now required for compilations. My view, it was desirable before, so I've always done quality management on compilations to make sure no one was doing any work and not documenting things they shouldn't have been. Both of these engagements can have second partner review, quality management review. Really? Second partner review, quality management review, is required in an audit where it's as complicated as a large multinational company. Not the most complicated file you have in the office, but a cosmically complicated review or compilation or audit. And, well, you can't do a review on a large multinational corporation, nor can you do a compilation. So you got to be aware that you could require it, and maybe in some very weird situation you would, but I can't imagine it. Now, people who use my forms have found and told me that they find use of the forms largely intuitive. Indeed, that was a design intention, so I'm happy they've told me that, and that little training was needed. Someone who knows how to use the forms can pretty quickly explain to a new employee how they're to be used. Training in auditing, training in standards, needed, but little training is needed in the actual physical use of the forms. It's self-evident, and that was intended. We'll quickly go over the quality management forms. Quality management is a process you have to do. It's an important process. You don't want to miss stuff that you're supposed to be doing that you're not doing. So there is a firm policy and quality management manual. It is what I call minimalist because you want to make sure you do this process, but you also want to make sure that you don't make it bigger than it needs to be. So it needs to meet the requirements of standards and don't go and expand it beyond what is required. So there are forms to guide the annual review. There is a confidentiality and independence letter that staff are to sign. And there are audit, review, and compilation inspection checklists. In a small firm, get together. Gather the partners in the boardroom. In the forms, I say do this around August. And I say around August because if I say it's to be done on August the 15th and I do it on August the 14th or the 16th, I've not met the requirements of standards and I've violated quality management rules. So I'll remind myself that sometime around August, which is a slower time, want to get together and do this. So you get together in the boardroom, you bring an audit review and compilation file, pass them down to the partner next to you, and review. And you will need a single person. There are other things you have to do, like distributing independence and confidentiality forms and getting them all back and going through the annual process you need to go through. One person will need to do that. So you'll have to pick a person who will do that. But not a big deal. Make it a bit of an event. Have a good time doing quality management. If you are a sole practitioner, you can't do the file inspection yourself on your own files. You don't want to. You'd like to have somebody take a look and see how you're doing. So have a colleague over, provide sandwiches and coffee, and do the quality management review. There is a YouTube site. Go to YouTube and search for Professional Workshops Inc. Watching any of these is verifiable as long as you get someone to watch it with and they can verify you and you can verify them. You could buy lunch for staff and look at some of these things. These videos also count as ethics PD as long as it's about doing things right, and very few of them are about doing things wrong. There are about 170 videos, most audit, professional standards section, and other topics. And this video will be up sooner or later. So thanks for listening.